Welcome back to Self Invested, where we talk about how you can do better with money. In this video, I have a chat with Ken Brooke, a qualified mortgage advisor, about the current state of the mortgage market and the Help to Buy equity loan and shared ownership scheme. Ken is the person that arranged my mortgage for me when I bought my property, and I wanted to bring him on my channel to have a chat about the shared ownership scheme and the Help to Buy equity loan scheme because he has over 30 years of experience in the industry and he loves talking about the home buying process. In our conversation, we talked about Help to Buy mortgages and why the interest rates tend to be higher than normal mortgages. And we also talked about the staircase and process and selling shared ownership homes. I thought our conversation was really interesting. I learned things that I never knew previously, and I'm sure it's going to be very useful to anyone that plans to use either of the schemes, the Help to Buy equity loan scheme or the shared ownership scheme. Make sure you stick around to the end because Ken gives some great tips that will be useful to any first-time buyer. If you're coming back to this video and want to re-watch a specific part, have a look down in the description to this video where I've left some timestamps to the different topics that we discussed during the video. Anyway, I hope you enjoyed the video, and if you do, make sure you give the video a like and subscribe to the channel if you haven't already. Thank you, Ken, for joining us today to talk about Help to Buy mortgages. I can imagine you're like really busy at the moment because I know there's a mad rush on at the moment because of the stamp duty holiday.
Absolutely, yeah. I
Yeah.
think really since since the announcement of stamp duty being suspended, it's probably never been busier. I have to say, in the last maybe week or two, it's eased up just a tiny little bit, and that might be because we're coming to that sort of crucial point now of whether, if you're finding a property that you can still complete in time, which has to be ahead of the 31st of March. But it's been incredibly busy, and it's mainly been caused by people that were perhaps not going to move because of the cost of stamp duty have realised they can probably save as much as £10,000 to £12,000, and so they've taken the plunge and put their property on the market, which has meant a bigger supply for first-time buyers.
So people aren't being scared off by sort of the higher than usual interest rates because although the base rate is quite low, I've been seeing that the mortgage rates have started to move up slightly.
Yeah, I'll be slightly controversial.
Yeah.
Lenders are cashing in on the basis of scarcity of money.
Hmm.
So the higher up you go, so when you get up to 85 or even 90% mortgages now. For example, this afternoon, Accord have come out with a 3-day window next week to borrow at 90% loan to value, but the only rate you can secure is 3.79 fixed for 5 years.
Wow. Wow.
Now, you know what the rates were prior to lockdown, and therefore, lenders are making huge amounts of profit on the back of, as you quite rightly say, the base rate being at its lowest at 0.25, and it's basically because of the scarcity of money. And I would imagine they will be inundated for that 3 days if people are ready to move, because it will mean they've only got to put the 10% down, because most of the stuff that I've been dealing with recently, the clients have been finding 15%, often with the help of mum and dad and gifted deposits and this type of thing, which has worked in this area where obviously property is very expensive. But certainly the 90% mortgages now are ridiculously high. 85% are much higher too, and it's really only down the bottom end where you've got plenty of equity that you'll still pay your nice low rates of sort of 1 point something.
Okay.
So it is definitely risk based, and it's definitely based on the scarcity of money.
So you finding this with Help to Buy mortgages as well?
The great thing about Help to Buy, obviously, is your 5% deposit, which is what you have to find based on the full asking price, is added to the 20% or the 40% that the government is giving to you. So your loan to value effectively becomes 75 or 55%, at which point you obviously qualify for the better interest rates. So the interest rates are obviously better with
Okay.
Help to Buy,
Have,
albeit that you're owning the property 100%.
yeah, so they haven't gone up as much or
But actually, I think to be fair, no, they haven't. I mean,
yeah, oh,
certainly,
that's good.
if
Yeah.
you're working on a percentage wise, they've
Hmm.
not gone up anywhere near as much as everyone that's trying to obviously buy their property outright. So on the basis, if you're looking for the 85 or certainly the 90% mortgage now, you are paying absolutely top dollar at 3.59 or 3.79 or whatever it was. But unfortunately, the client, all the client will do is to extend the term. So they'll take a longer term mortgage in order to be able to afford the payment. So it doesn't change people's desire to not have to find that extra 5%, because on a £300,000 purchase, that's £15,000 that you've got to find, which they're happy to pay a bit more so as not to have to pay 15,000.
Yeah, so essentially they're going from 25-year mortgage to 30-year mortgage.
35 mostly.
30, oh wow.
Yeah, and you can go to 40 years with some lenders if you're young enough. Now, if I had a 40-year mortgage now, I'd be 100 when I paid it off. So I don't think I'm allowed to go down that route now. So 100 and a half. 100 and a half. But yeah, but you know, lenders will now take end dates to age 70 without asking for any proof of pension. So if you're 34, you can have a 35-year mortgage standard, but of course you're not paying off obviously as much of the capital and all the other bits and pieces which we do draw to people's attentions. But to be brutally honest, for most people it's all about what's my monthly payment.
One thing I didn't realize was that if you're a Help to Buy borrower, you don't have access to the same mortgages or mortgage rates as a normal borrower that's not using Help to Buy. Is there any sort of reason why? Because I think you showed me an example once, and the interest rate for the same loan to value mortgage for a property worth the same price was slightly higher for the Help to Buy borrower than it was for the non-Help to Buy borrower.
I think to be fair, and to answer your question straight on that, it's really that the lender is assessing that potentially, as a Help to Buy borrower where you're only putting 5% of your own money in, you're deemed to be a slightly higher risk of not making the payments. And lenders base everything that they do on risk. So the bigger the risk to them, the higher the interest rate that they're going to charge you. So whilst they're buffeted by the government's 20%, if we use 20% as an example, you're always going to pay a little bit more for the privilege on the basis that what you're effectively getting in real terms is a 95% mortgage, but you're being charged 75% rate. So they can afford to take a little bit extra off the rate, or add a little bit extra on the rate, because not every lender in the market does Help to Buy mortgages anyway. So it's, I think you've probably got your list of Santander's nationwide and so on and so forth. But there's a limited number, and it's not available in the whole of the marketplace because it is quite a complex kind of legal transaction. And I know you want to talk about what happens at the end of the 5 years, and that's one of the reasons as well, in terms of, you tend to find that not many, I'll use my words carefully, not many will buy out the share because they probably still can't afford it in 5 years' time, unless they've had a significant pay rises that enables them to borrow the mortgage. That then means that they can take home the government share and then continue to live in the property. So the calculation or the gamble has been that just to get on the property market, a lot of borrowers bought, 5 years ago when it started, and we're probably happy to sell now based on the fact that they've made 80% or 60% of the increased value over that time. So it's given them some equity that's now allowing them to buy something that they can afford outright with the equity that they've made from the Help to Buy.
So just on the Help to Buy equity loan borrowers, do you find that sort of when they come to the end of the 5 years, more likely than not, they end up selling rather than?
Correct. 100%.
Okay. Oh, I didn't even know that.
I mean, I think you asked me the question: have I done anybody that's? Oh, sorry, I should rephrase that. I haven't done anybody. have I helped anybody? Have I helped anybody? And the answer is we've had one or two that have looked at it and then realised that it's too expensive because you've still got to have enough income to be able to support the, more so with the London Help to Buy with the 40%, because if you can't afford it from day one, then your salary's got to go up quite dramatically over that 5 year period. And then obviously most people don't want to pay initially the interest, because if you then go beyond the 5 years, you pay 1.75 on the equity balance
Hmm.
for the first year, and then it goes up by, I think it's 1% plus
Plus,
RPI
yeah,
over the year on year. So you're not actually paying any of it back
yeah.
until you actually make the effort to try and raise the equity to buy out the government share.
So the other thing I was wondering was about sort of the value of the properties that are new builds after 5 years. Do you find that the value doesn't increase much, or it goes down, or it's about the same?
It's a good
Um,
shout.
yeah.
I always feel that you're probably always paying a little bit of top dollar for a new build
Yeah.
because everything is brand new.
Hmm.
It's the same. It's almost the same with a car. When you buy a brand new car, you get in it for the first time. It's the same as a house, but it wouldn't be fair to say that the house depreciates in the same way that a car does when you drive it off the forecourt.
Hmm.
But you've got everything brand new. So when you come to sell it, then the person that's then buying it, A, has to like new builds,
Hmm.
and B, has to accept that the white goods and everything in there are not then brand new. But in certain locations, obviously, and location is always the key to property.
Hmm.
If property values have risen in that location over that period of time that you've owned it,
Hmm.
that will more than offset any small drop in the real value
Hmm.
based on what you spent for or what you paid for it when you actually bought it. If, say for example, there's 40 or 50 houses in, I don't like the word estate, but they're all built close together
Hmm.
and they're all coming up to the end of the 5 years,
Hmm.
and nobody wants to stay there, and they all go on the market at the same
Hmm.
time. And the chances are, if the supply is up, then you're not going to get the price that you wanted in the first place. But
Hmm.
it's a good way in to
Hmm.
buying,
Yeah.
providing you go in with your eyes wide open
Hmm.
and what it's a little bit like the time bomb ticking away. Really at the end of 5 years, you need to kind of work out yourself if your
Hmm.
career path is going to mean that you can, buy that 20% or 40% share.
Another question I had was just on shared ownership and actual sort of staircasing. I
Yeah,
know with
a lot
the
easier.
help to buy, it's a lot easier. Okay.
I think, to be fair, with shared ownership, certainly when I used to do them, you could staircase them as little as 10%,
Okay.
right up to the full amount.
Hmm.
The only thing I would say is that obviously there are always administration fees
Hmm.
that come with that. So if you're going to do 10%, then in some ways you're better off trying to do a bit more, so you're not paying for 5 lots of admin fees as much as
Hmm.
anything else, because it can become quite an expensive business.
Hmm.
But the reality is, yeah, shared ownership, because there's no time scale. The housing
Uh-huh.
association isn't telling you that you've got to pay it off in 5 years, 6 years, 7 years, 8 years. No, you can have it for the whole term of the mortgage. Relatively speaking, you've come in quite low,
Hmm.
so you haven't got to be earning a huge amount more to be able to try and staircase it. So it is very, it's not dissimilar from Help to Buy,
Hmm.
but it's really when your circumstances change, in a positive way, and you feel that you want to stay in the
Hmm.
property. Because again, a bit like Help to Buy, if you're only looking at it just to make a few quid to start with, to
Hmm.
maybe give yourself a deposit and then go and buy something outright, that's
Hmm.
that people will see better to have 50% of something than 100% of nothing and go down the rented route.
One of the concerns I think people have about the shared ownership scheme is that um, it could be difficult to sell your property when you want to, if you decided you wanted to sell it, but you don't own 100% and you're maybe stuck between, I don't know,
Okay.
50 and
The,
75%.
the system used to be that it was offered back first to the housing association at the agreed open market value
Okay.
to see if they had anybody in their waiting list that wanted to buy into a shared ownership. So there was an agreed period of time that you offered it back to the housing association. If they didn't sell it for you in that agreed period of time, then you could put it on the open market. But it would be
So,
on the open market as fully priced,
mhm.
because if you're going to sell it, you've got to pay the housing association back their share as well as take the money on your share.
Oh, so when it goes on the open market, it's going to
Anybody.
normal buyers that will be buying
Yeah, yeah,
100%.
yeah.
Okay.
Mr. and Mrs. Smith, who have nothing to do with that, but the prerequisite usually
Hmm.
is that you offer it back to the housing association
Association.
first to
Hmm.
see if they've got anybody on their waiting list.
And do you find that most times the properties are sold to somebody on the waiting list of the housing association, or
Not
does it?
wasn't usual.
It
Wasn't usual back in my day.
okay, it
Usually
used to go open market, but I
on the
guess
open.
if it goes to open market, then you're on the market with everyone else. You're just
Correct.
as likely to sell as everyone else. So there
Correct.
maybe shouldn't even be that fear about not being
Yeah,
able to sell your
I agree
property.
totally.
Yeah.
I agree
Okay.
totally.
Before we go, I just wanted to sort of find out if you have any sort of key bits of information or tips for anyone that's interested
Of
in the
course.
Help to Buy scheme or the shared
Of
ownership
course.
scheme.
Of course.
Mhm.
I think, and I'm bound to say this, I think that if anybody's interested, you should always try and talk to a mortgage broker. Don't wander into the first bank in the high street, because we do have, we do have the whole of, well, what we call a whole of market package. So we can look at all the different lenders that are available. Um, my best advice is work out exactly what you can afford on a monthly basis before you even start. What can I afford, and it not wholly affect my lifestyle. And when it comes to looking for property, the key bit of advice is, how easy can I sell it?
Thank you
That's the
for
key.
that. Yeah. Yeah.
Because we'll make
And
it, we'll all make it easy for you to buy it, but when you come to sell it, I think we've had this conversation.
yeah.
If it backs onto a railway line,
Hmm.
it's fine if you're going to sell to a train spotter, but not
Hmm.
for the average Joe that doesn't want a train chundering past every 20 minutes.
Hmm.
Is it, nowadays, probably more so than ever, does it have a garden?
Hmm. Yeah.
If you're
Yeah.
forced, if
Very
you're
much.
forced to
Yeah.
work from home now, you've
Yeah.
probably got an issue, and more people want a bit of garden. It doesn't necessarily now have to be close to the station, because
Hmm.
at the moment nobody's going to, well, hardly anybody's
Yeah.
going to work.
And I think it's
So
going to change going forward anyway. I think
yeah, I think it
things
will go
do
full
get back to the
circle,
new
because
normal. Yeah.
yeah, and I think so. But I think those are the kind of things that just almost try and step outside of the bubble,
Hmm.
and look at it from the point of view of, if you was advising somebody else,
Hmm.
would you be as keen to tell them to buy it
Hmm.
as you are yourself? And if you do compromise, then sadly you will regret it at some stage, because
Hmm.
it will stop you from getting where you want to be.
What I'm going to do is I'm going to leave your contact details down in the description to this video. So if
No
anyone
problem.
wants to get in contact with you, they can just go into the description and
Brilliant.
find your
And if they
details there.
just remind me where they got the name from, that will help me.
Yeah.
And I'll happily discuss it at no cost to
Yeah.
anybody. I mean, again, going back to the way I do my business, I don't charge fees for arranging mortgages.
Hmm.
I'm happy to give, lots of experience and advice from over the years. But more importantly, as you know yourself, it just helps to be able to understand the process and look where you were a few years ago
Yeah.
and where
Yeah.
you
Yeah.
are now, in
Yeah.
terms of
No, definitely.
you've got that thirst for knowledge now, which is great.
Thank you for watching the video. I hope you enjoyed it. Just before you go, I just want to clarify that Ken works under the Just Mortgages banner and has access to the whole market. So that means that he's able to work with all the lenders on the market as long as they're happy to work with mortgage brokers. He also doesn't charge for having a conversation with you or arranging your mortgage. So I think if you're interested in actually finding out more about what your options are, or you want to get a mortgage, then I think it's worthwhile getting in contact with him. If you want to find out more about mortgages or mortgage brokers, then make sure you give my video on mortgage tips for first-time buyers. There should be a link that pops out above my head. Otherwise, you can find the link to that video down in the description. Anyway, take care and I'll see you in the next video. Bye.